Like a rising stock, her stock too rose exponentially to chairperson of Sebi, and just as abruptly as the market turned, her fortunes also went under a cloud. We are talking about the first woman to lead Sebi, the Securities and Exchange Board of India, Madhabi Puri Buch, who is at the center of a growing list of controversies, alleged conflicts of interest, questionable financial ties, and her handling of high-profile investigations. Madhabi Puri Buch had a meteoric rise from being a banker at ICICI to one of India's most important regulators, overseeing India's stock market. Meanwhile, the accusers of Adani, the US-based research firm Hindenburg, who had created havoc with Adani's stock, had been vanquished, or so it seemed. Smarting at being given short shrift by Sebi, who found their allegations baseless, they played their last and final card, alleging that Buch held investments in the same offshore fund used by the Adani Group and implied this was the reason Sebi gave his companies a clean chit over accounting fraud and market manipulation allegations. That her ex-employer, ICICI, gave her ESOPs totaling rupees 16.8 crore and other benefits worth rupees 2.77 crore, which was even higher than her annual salary of rupees 1.3 crore. That too, 8 years after she retired from the bank and while she was chairperson of Sebi and even paying tax on her behalf. That she collected rent of 2 crores from her property rented out to an affiliate of Waka, another company under Sebi investigation. That she traded securities worth 37 crore rupees while holding positions in Sebi, violating Sebi's own code of conflict of interest, and worse, held investments in the Chinese stock market, even as the country tightened the screws on its threatening neighbor. And not only her, even her husband, Dhaval Buch, influenced Sebi's regulations on REITs, real estate investment trusts that benefited the US giant Blackstone, where he worked recently as senior advisor. The Congress, forever looking for an opportunity to embarrass the government, jumped in claiming she held a 99% stake in Agora Advisory, a company that provided advice to 6 publicly listed entities that are governed by Sebi, all while being a Sebi whole-time member between 2016 and 2022. Z. Subhash Chandra, wounded by Sebi's ruling against his son, Punit Goenka, from assuming the mantle of CEO in their proposed merger with Sony, blamed her for making the deal fall apart. Adding fuel to the fire were 300 of Sebi's own protesting employees, who accused her of fostering a toxic work culture and demanded her resignation. So with allegations hitting her from all directions in a matter of weeks, the Buch tribe defended themselves, addressing some, but crucially, not all of the allegations. In the Adani matter, they claimed that of the 32 accusations, Sebi had investigated 30 and found them to be without any basis. The other 2 are still under investigation. However, it is indeed surprising that they did not find even minor infractions. Buch claimed that investments in the fund flagged by Hindenburg were made almost 2 years before her joining Sebi and as private citizens in Singapore, in a company managed by Dhaval's childhood friend Anil Ahuja. And though the offshore entity was the same, they never invested in Adani Group securities. The ICICI allegation is blatantly false because payments she received from ICICI were through an annuity scheme, and exercising ESOPs can be encashed anytime up to 10 years after retirement, something approved in Sebi guidelines and not as falsely claimed having a 3-month time limit. While the 3-month window exists, it is applicable only for those dismissed from service, not those retired, as Buch, and about ECCI paying TDS on her behalf. Come on, that is normal practice. TDS must be paid by the person or entity writing the check. Rental income from property doesn't seem wrong by any stretch of imagination, especially if the amount is not above market rates, which would then surely be questionable. Anyway, the apartment was leased in fiscal year 20, well before the probe began, and she claims she was not involved in the probe in any case. Having investments in the Chinese stock market, while not illegal for an NRI, which she was when she and her husband invested there, is certainly a little embarrassing for her. However, whether it is ESOPs, rent or China stocks. Rightly, she should have declared it to the relevant authorities, and if she did as she stated she did with her Singapore investments, then where is the problem? Her husband, Dhaval's work at Blackstone was based on his expertise as a supply chain expert from his career at Unilever, and Blackstone is heavily involved in warehousing and logistics. The companies named in the allegations too came forward in support of the Buch. Mahindra and Mahindra clarified that Dhaval Buch was hired for his supply chain expertise, as did Pidilite, against whom there is no Sebi inquiry, while Dhaval's assignment ended at Dr. Reddy's Laboratories before Buch became Sebi chairperson. In fact, 3 of the 6 firms named had no Sebi inquiry against them. Sebi came out in strong support of Madhabi Buch, claiming she made the necessary disclosures and recused herself in matters involving conflict of interest, but refused to entertain a RTI plea into providing instances of where she recused herself. This reminds one of how ICC Bank had come out in support of Chanda Kochar when she was accused of loan fraud, only to backtrack later. Yet, if all these allegations are indeed baseless and false, then why did her advisory firms, which she claimed were dormant, continue to receive money? Why did Mahindra and Mahindra pay Madhabi's husband and their consultancy firm, Agora Advisory, separately? And why is she avoiding the Parliament's Public Accounts Committee, a session she skipped twice? Some fire, some smoke perhaps, more of one than the other. Nonetheless, she was the first person from the private sector to become head of an organization that is typically run by career government servants. Would she be the last? What are your thoughts?